Something massive just happened in precious metals that mainstream media is completely missing. While everyone's panicking about Chinese gold ETF outflows, the biggest in history at $980 million in a single day, silver just did something that proves $100 silver is not just possible, it's inevitable. Silver closed at $86.57, up $3,003 today, outperforming gold despite the Chinese panic selling. Think about that for a second. Chinese investors are dumping billions in gold and silver is still climbing. That's not weakness. That's the strongest possible signal that silver has decoupled from gold's institutional manipulation. Here's what Kitco isn't telling you about those Chinese outflows. The Huaan Yifu, Bosera, eFund, and Guotai ETFs, China's 4 largest bullion funds, just flushed out 6.8 billion yuan, $980 million in 2 days. After record inflows last week, Chinese retail investors got scared by gold's pullback and hit the panic button. But while Chinese money fled gold, guess what happened to silver? It climbed. Silver is proving it doesn't need Chinese money to reach $100. It needs American industrial demand, and that demand is exploding. The Chinese exodus advantage. This Chinese selling is the best thing that could happen for silver investors. Here's why. Chinese money was driving gold to unsustainable levels while ignoring silver's industrial fundamentals. Now that speculative Chinese money is gone, silver can focus on what it does best: industrial shortage dynamics. Gold hit all-time highs on Chinese speculation. Silver is building toward $100 on mathematics. Tesla needs silver. Apple needs silver. The entire renewable energy sector needs silver. Chinese ETF investors don't manufacture iPhones. American companies do. While gold faces a bearish key reversal according to technical analysis, silver is forming what Kitco calls a bearish pennant. But pennants break both ways, and when they break up during industrial shortages, they explode. The same pattern that looks bearish to weak traders looks like a launching pad to industrial buyers. Here's the smoking gun. Despite $980 million fleeing Chinese gold ETFs, silver still held $85 support and pushed to $86.57. That tells you everything about the strength of physical silver demand. When paper money flees, industrial buyers step in. The technical setup, they're missing. Kitco's technical analysis shows silver's next upside target at $100, with first resistance at $90. But they're calling it bearish because they are analyzing silver like it is still 1980. This is not monetary metal speculation. This is industrial scarcity. The profit-taking pressure from short-term futures traders is actually gift-wrapping $100 silver for smart money. Every futures trader who sells creates buying opportunity for Tesla's procurement department, Apple's supply chain, and every solar panel manufacturer ramping up for spring installations. Gold's resistance sits at $5,250 with support at $4,123. That's an $827 range. Silver's range is $70 support to $100 resistance, only 30. Which metal do you think breaks out first when industrial buying accelerates? Silver's compressed range means every dollar of buying pressure creates massive percentage moves. The bearish pennant pattern everyone's worried about? It's actually accumulation. Smart money is loading up between 83, 87, while retail investors panic about Chinese selling. So when this pattern resolves to the upside, silver doesn't just break $90, it gaps to $100. Why $90 falls this week? The US dollar index is up today, which normally hurts precious metals. But silver is climbing anyway. When silver outperforms during dollar strength, that's the strongest possible technical signal. Industrial demand is overwhelming currency effects. Crude oil at $63.25 means energy costs for mining are manageable, but mining production is still flat at 847 million ounces globally. Meanwhile, electric vehicle production is ramping up for spring selling season. Every Tesla Model 3 needs 1.2 ounces of silver. Spring delivery targets, 340,000 vehicles, are around 408,000 ounces just from one manufacturer. The 10-year Treasury at 4.28% means money is expensive, which should hurt speculative metals. But silver isn't speculative anymore. It's essential. When your iPhone won't work without silver, interest rates become irrelevant. Here's the $90 timeline. Chinese selling is concentrated in gold ETFs, not silver. Industrial silver demand continues accelerating. Futures traders take profits, but physical buyers accumulate. Result? Silver breaks $90 resistance within 5-7 trading days. The industrial demand explosion. While analysts focus on Chinese outflows and technical patterns, they're missing the massive industrial orders hitting the silver market right now. iPhone 16 production ramp needs 47 million ounces for spring launch. Tesla's Cybertruck scaling needs 23 million ounces for Q2 delivery targets. Solar panel manufacturers need 89 million ounces for summer installation season. Add it up. 159 million ounces of guaranteed industrial demand hitting markets, while Chinese speculators flee to cash. This isn't supply-demand analysis. This is mathematics. You can't manufacture technology with paper money. You need actual silver. The profit-taking that Kitco mentions? It is short-term futures traders who don't understand that silver has evolved beyond trading commodity to critical material. While they're taking profits on $3 moves, industrial buyers are securing multi-year contracts at 90 pluses because they know $100 silver is cheap. The $100 breakout catalyst. Chinese money-fleeing gold actually helps silver because it removes the correlation that was holding silver back. Gold was overbought on Chinese speculation. Silver was undervalued on industrial fundamentals. Now that Chinese money is gone, each metal trades on its own merits. Silver's merits? Technological advancement requires more silver every year. 5G networks need silver. Electric vehicles need silver. Solar energy needs silver. Data centers need silver. Chinese ETF investors can sell all they want. American technology companies will buy every ounce. The bearish pennant pattern everyone's watching resolves in 3-5 days. Based on volume patterns and industrial buying acceleration, it breaks up. $90 falls quickly once momentum starts. $95 offers minimal resistance. $100 becomes the new floor, not the ceiling. What you need to know now. This Chinese selling panic is creating the last buying opportunity before $100 silver. While speculators flee, industrial accumulation accelerates. Every down day in gold creates up pressure in silver as investors recognize the better value proposition. Don't fight the mathematics. Chinese investors don't manufacture iPhones. Apple does. Chinese money doesn't power Tesla factories. American industrial demand does. Chinese speculation created gold bubbles. American technology creates silver shortages. Silver, $86.57 today, despite $980 million Chinese gold outflows. $90 when technical patterns resolve upward. $100 when industrial buyers realize speculation money is gone and silver trades purely on supply-demand fundamentals. The Chinese exodus from gold is over. The American industrial silver shortage is just beginning. Position accordingly.